Today, we've got a lot to talk about in the stock market. We'll be discussing AMC, DWAC, and other stocks that have been skyrocketing recently. Is this the start of a new run? And hold on tight, Tesla shareholders, because there's huge news for you. This could help Tesla sell more cars and could be a game changer. For those who missed the news, Tesla is now offering 84-month loans as interest rates rise. Remember when Elon warned about this? He was concerned that any rate hikes from the Fed could cause problems, and it looks like his worries were justified.
Federal Reserve raising interest rates by 1/4 of a percentage point in a unanimous vote that brings the new range to 5.25% to 5.5%, the highest Fed funds rate in 22 years. And the Fed continues to signal the possibility of future rate hikes. It says it's going to be looking at, quote, the extent of additional policy firming that may be appropriate. That's the kind of language it used in June, which kind of told us that July was on the table. It says in doing so, as it did say in June, it will take account of the cumulative and lagged effects of prior hikes. Economic growth was raised just a little bit. They're saying it was moderate economic growth compared to modest in the prior reports. I guess a modest upgrade you could call it. Job gains were robust. The unemployment rate remains low, and inflation remains elevated. Concerns remain in the statement about tighter credit conditions from banks, but those effects were seen as uncertain. Very much a carbon copy of the prior statement, guys. The only difference here is they took out holding to raising. They raised by 1/4 point, and now they're back into this mode here of determining the extent of additional policy firming that may be appropriate. So there's your guidance line. Have at it, Tyler.
Hi, Victoria Guido with Politico. I wanted to ask about the SEP, which suggests that you would cut rates as overall and core PCE get to around or under 3%. And so I'm wondering, is the level of inflation what's sort of important there as you think about getting to 2% and when you might start cutting rates? Or is the speed at which inflation is falling also important?
I think you'd take both into account. I think you'd take everything into account when you start cutting rates. It would depend on a wide range of things. And when people are writing down rate cuts next year, you know, it just is a sense that inflation is coming down and we're comfortable that it's coming down and it's time to start cutting rates. I think, but I mean, there's a lot of uncertainty between what happens, you know, in the next meeting cycle, let alone the next year, let alone the year after that. So it's hard to say exactly what happens there, what's motivating people.
So if it's sort of stubbornly in maybe the high twos, you wouldn't necessarily cut rates.
I'm not saying that at all. I'm not giving you any numerical guidance around that. I'm saying we'd be comfortable cutting rates when we're comfortable cutting rates, and that won't be this year, I don't think. It would be, you know, many people wrote down rate cuts for next year. I think the median was several for next year, and that's just going to be a judgment that we have to make then, a full year from now, and it'll be about how confident we are that inflation is in fact coming down to our 2%.
The Fed said inflation was temporary and under control, but many believe they've overdone it with their policies. That's why Tesla had to introduce the 84-month loans. These loans mean you'll be paying for your car over 7 years. But the good news is that EVs tend to last longer and have fewer maintenance issues. Despite the recent drop in Tesla's stock, it's been doing pretty well overall. It's up around 1.33% for the month, which translates to a nice annualized return of about 15 to 16%. Not too shabby, right? Wall Street stock price prediction for Tesla is not always accurate. They currently have it at a 2.57% upside potential over the next 12 months, but their past predictions haven't always been right. For example, in January, they predicted Tesla to be around $112 in a year, but it's already surpassed that in just 7 months. So take their forecasts with a grain of salt. Here's the scoop on Wall Street analysts and their predictions. They can be pretty reactive rather than proactive. When stocks go up, they tend to say sell, but at the same time, they raise their price targets. It can get confusing. For example, take Cathie Wood, who manages a big fund. She recently sold some Tesla shares before a dip in earnings. But hey, that's just her managing her fund and making decisions that suit her strategy. People love to criticize successful investors, but it's all part of the game. shifting gears to NEO. The stock has been doing pretty well lately, with about a 1% gain in the past week and a nice 25% gain for the month. NEO has been bouncing back nicely, and if the US and China can cooperate economically, we might see even more positive movements in the stock. So, keep an eye on these stocks, and remember, don't let the noise from Wall Street distract you from your own investment decisions. Stay focused and make informed choices that align with your goals. Let's see what's going on here. The NEO stock price and analysts keep changing their predictions as the stock goes up. It's annoying because they don't stick to their original analysis based on fundamentals and technicals. They just follow the price movement. We want to see NEO's stock continue to rise to $20 to $30 per share, which many people would love to see.
We come to this place for magic. We come to AMC theaters to love, to cry, to care. Because we need that, all of us. That indescribable feeling we get when the lights begin to dim. And we go somewhere we've never been before. Not just entertained, but somehow reborn. Together. Dazzling images on a huge silver screen. Sound that I can feel. Somehow, heartbreak feels good in a place like this. Our heroes feel like the best part of us. And stories feel perfect and powerful. Because here, they are. AMC Theaters. We make movies better.
AMC is going to be hot tomorrow, because the movie theaters did well over the weekend due to positive news from a court case. They think there might be a short squeeze on Monday. As for DWAC, there could be more volatility in the future, but it's uncertain whether it will go higher or lower. Every day is an opportunity to make money, but we need to make the right calls. I'm excited to try out different strategies, and hopefully, it leads to some interesting content and profits for our portfolios.